Lotus Cars, which is owned by China's Zhejiang Geely and Sri Syed Mokhtar Albukhary-controlled Etica Automotive, is pushing ahead with plans to float its Lotus Technology division on the stock market in a move that would value it at £5 billion to £6 billion, or about £28.5 billion to £34.2 billion ringgit. Haymarket Media Group's weekly automobile magazine, Autocar, said in a report today that the brand told investors it plans to sell 100,000 cars per year by 2028, of which 90,000 will be electric saloons and SUVs produced by Lotus Technology. It said Lotus is in the middle of a roadshow starting in China and currently in London to give potential investors a sneak preview of next year's electric SUV, codenamed Type 132. Citing a spokesman, it said the purpose of the roadshow is to take the temperature of investors' enthusiasm in buying Lotus stock. He reportedly said the company favours an initial public offering over the special purpose acquisition company method of listing, recently employed by Geely stablemate Polestar, despite the extra scrutiny involved in the more traditional route to market. The report added that Lotus aims to float in 12 to 24 months, but the decision on whether to do so in Asia, London or New York had not yet been taken. The spokesman was also reported as saying that the reaction in China to the potential float was strong, and that the decision to list Lotus Technology and not Lotus Cars is down to the ownership structure of the divisions. AirAsia X, or AAX, the low-cost long-haul affiliate of Capital A, has fixed the issue price of its 1-for-1 rights issue at 28 cents apiece. The rights issue price of 28 cents represents a 32.7% discount to the theoretical X-all price of the shares of 41.58 cents, calculated based on the 5-day volume-weighted average market price of the shares as at February 18th of 55.15 cents. Based on the rights issue price, the proposed rights issue will raise up to 116 million ringgit for the airline's working capital requirements. In a bourse filing today, AAX said a further 50 million ringgit is expected to be raised from the proposed share subscription via subscription by a special purpose vehicle. The fundraising amounts are less than what it had intended to raise. The airline had intended to raise up to 300 million ringgit through the rights issue and an issuance and allotment of new AAX shares to raise another 200 million ringgit. Explaining the reduction in funds to be raised, AAX CFO Andrew Littledale said, "A larger fundraise is now not only unnecessary but will also be punitively dilutive, particularly to existing retail shareholders who may not be able to fund a bigger rights issue at this difficult time." He said that at the beginning of 2021, AAX had 95 million ringgit in cash. Meanwhile, its average cash burn for the last 14 months averaged 3 million ringgit a month, so he expects the carrier to be able to sit through any eventualities in the next couple of years, even if borders do not open, which, however, will not be the case. AAX shares closed 4% lower at 60 cents, valuing it at about 249 million ringgit. Telecom Malaysia, or TM, says it is part of a consortium for the latest Southeast Asia, Middle East, Western Europe submarine cable system that connects Malaysia with Singapore, Bangladesh, India, Sri Lanka, Maldives, Pakistan, Oman, Djibouti, Saudi Arabia, Egypt and France. In a statement, TM said its participation in the consortium was made official with the recent signing of the construction and maintenance agreement with all consortium members, including Bharti Airtel, Etihad Etisalat Company and Singtel. The system, which has an open cable system concept and a design capacity of more than 100 terabytes per second, will provide TM with one of the lowest latency routes between Malaysia and Europe and create an additional layer of network diversity and resilience for the heavily loaded traffic between Asia and Europe. TM Group CEO Imri Mokhtar said the latest investments will allow the group to address its capacity requirements to cater for increasing future digital demand, as well as support the deployment of hyperscalers data centers and the future requirements of the 5G network in the country. According to him, the submarine cable will land at TM's new cable landing station in Morib in Banting, Selangor. The company's shares fell 2.16% to close at RM5.43 today for a market capitalization of RM20.49 billion. CTOS Digital's shareholders have approved its RM205.8 million acquisition of a 49% stake in Juris Technologies or Juris Tech and a proposed private placement of new shares to raise up to RM270 million to fund future acquisitions. CTOS Deputy Group CEO Eric Amberger said the proposed acquisition dovetails with its goal of becoming the solution provider of choice to financial institutions, providing best-in-class credit data, software solutions and analytics services. He said the credit reporting firm will also increase its capability to cater more effectively to the emerging consumer markets of digital banks, peer-to-peer, buy now pay later and micro payday loans providers. With the acquisition slated for completion in the first quarter of 2022, he said new contributions from Juris Tech are expected to complement CTOS's organic growth in its existing segments as it seeks to fulfill the pent-up demand following the reopening of economic sectors since the fourth quarter of 2021. CTOS shares closed unchanged at RM1.69, valuing it at RM3.7 billion. The RM40 billion Semarak Niaga Keluarga Malaysia initiative launched by Putrajaya today is set to increase access to financing for the business sector, especially for micro, small and medium enterprises and the informal sector. According to Bernama, Prime Minister Datuk Sri Ismail Sabri Yaakob said the program will benefit all entrepreneurs. There's the RM200 million informal and microfinancing scheme that will offer loans of up to RM10,000 at zero interest rates. For agri-food entrepreneurs, a microcredit scheme by Agrobank will offer loans of up to RM75,000 at a 0% rate for the first 6 months and a moratorium facility for up to 6 months. Companies facing high indebtedness or gearing problems will have access to funding methods in excess of RM2.2 billion through equity and quasi-equity investments. Also included under the program is Bank Negara's RM1 billion business recapitalisation facility. The central bank's special funds, especially the Targeted Relief and Recovery Facility and the Agro-Food Facility, have also been collectively increased by RM2.5 billion to RM10 billion. There's also the RM22 billion scheme for Syarikat Jaminan Pembiayaan Perniagaan, among others.